a 360-megawatt data center commitment in Indonesia, a reported 190% surge in South Korea's daily average semiconductor exports. These are not headlines about a new chatbot or another model launch. They are signals from the physical economy behind AI, and this week those signals are getting louder across Asia. The AI boom is no longer visible only in software products. It is showing up in power contracts, chip shipments, fabrication plans, private funding rounds, and even cybersecurity proposals. The more useful question now is not which model looks strongest this quarter. It is whether these developments, taken together, show that Asia's AI economy is being reorganized around infrastructure, capital, and security constraints that may matter just as much as the models themselves. Start with the physical anchor. CoreWeave is reportedly planning an Indonesia expansion that would involve 3 new data centers and 360 megawatts of contracted IT power, with completion targeted by 2028. If realized, this would be the company's first infrastructure footprint in Asia-Pacific. The significance is less about one company entering one market, and more about what the project implies. AI infrastructure competition is increasingly shaped by power availability, land access, construction capacity, and the ability to execute on time. Indonesia appears to be entering that contest more seriously, positioning itself as a possible host for large-scale compute clusters. At the same time, this should be framed carefully. The available reporting does not provide the financing structure, exact sites, energy sourcing, anchor customers, or construction partners. So this is better understood as a directional signal than a fully confirmed build-out. Still, the direction matters. The AI race is becoming a race for grid capacity and buildable land, and Southeast Asia is becoming more relevant to that race. If Indonesia points to where compute might be built, the next development points to how advanced compute may be allocated. NVIDIA has entered a long-term partnership with Safe Superintelligence that combines a substantial equity investment with guaranteed access to NVIDIA's next-generation Vera Rubin compute platform. The key point here is not just the size of the deal, it is the structure. The economics of frontier AI appear to be moving beyond a simple vendor and customer relationship. Capital, platform access, and research infrastructure are becoming bundled together. That matters because it suggests the strongest strategic relationships with chip suppliers may confer an advantage that cannot always be replicated by simply paying more in the open market. For Asia, the link is indirect but important. Whatever compute Safe Superintelligence eventually deploys still depends on Asian semiconductor fabrication, advanced packaging, component supply, and systems integration before it becomes usable infrastructure. The financing model may be evolving elsewhere, but the manufacturing dependence on Asia remains intact. That dependence becomes even clearer when we look at where capital is flowing. In China, Moonshot AI has reportedly closed a $3.5 billion funding round at a $35 billion valuation, above its original fundraising target, and is now said to be considering a Hong Kong initial public offering. The immediate takeaway is that large pools of capital are still available to selected Chinese AI companies, even while leading-edge semiconductor access remains constrained. That does not mean those constraints are irrelevant. It does suggest that capital formation inside China's AI sector has not stalled for firms seen as strategically important. Possible Hong Kong IPO needs careful framing because it remains a reported option, not a completed listing. But even as a possibility, it raises an important structural question. Can Hong Kong function as a capital recycling venue for mainland AI firms, giving them a path to public market funding and access to international investors without relying on markets facing tighter restrictions? If that pathway becomes more established, it would be more than a single financing event. It would become part of the architecture of China's AI funding system. From capital formation, move to a harder signal: trade data. NH Investment and Securities reported that South Korea's daily average semiconductor export growth rate reached 190% in July 2026, and the brokerage project's year-on-year growth above 100% in the third quarter. Importantly, that outlook is explicitly tied to AI-related capital expenditure by major technology companies. This matters because semiconductor exports are a physical measure, Chips are being manufactured, shipped, and sold. That gives the data more weight than AI narratives built only on forecasts or sentiment. Still, some discipline is necessary. This is a brokerage report, not an official government release. The prudent reading is that it is a strong early indicator, not final confirmation. It will matter whether official South Korean trade statistics support the same picture, and whether direct disclosures from Samsung Electronics and SK Hynix align with it. If they do, this would stand as one of the clearest hard data signs yet that AI infrastructure spending is translating into real semiconductor demand. The hardware story also extends beyond leading-edge memory and logic chips. Vanguard International Semiconductor has outlined capital expenditure of roughly $60 billion to $70 billion, mainly to support a new 12-inch fabrication facility in Singapore. The stated driver is structural demand for AI power management chips. That detail is important because it corrects a narrow view of AI hardware. AI infrastructure does not run only on the most advanced accelerators. It also depends on less visible chips, often built on mature process nodes that manage and stabilize power across servers, racks, and data center systems. Without those components, advanced compute clusters cannot operate reliably at scale. There's also a geographic point worth noting. This is a Taiwan-linked semiconductor company expanding in Singapore. That does not suggest a move away from Asia. It suggests diversification within Asia, with capacity spread across multiple hubs, rather than concentrated in one place. The AI hardware stack may be growing more distributed geographically, even as it becomes more integrated operationally. That brings us to the final layer, and perhaps the easiest to underestimate: security. A CSIS commentary argues that Taiwan should move toward a nationally integrated, AI-enabled cybersecurity system to address sustained cyber pressure originating from China, potentially drawing on an approach similar to the United Kingdom's AI cyber shield concept. The logic is straightforward. Taiwan's semiconductor position does not depend on fabrication plants alone. It also depends on digital systems, networks, and data infrastructure that can be disrupted, even if physical facilities remain intact. This broadens the definition of semiconductor security. It is not only about export controls or protecting fabs. It is also about digital resilience across an entire technology ecosystem operating under pressure. That said, precision matters here as well. This is a policy recommendation, not an adopted national program. There's no confirmed budget, no implementation partner, and no timeline. But the discussion itself is revealing. Cyber resilience is increasingly being treated as part of semiconductor supply chain security, rather than as a separate policy domain. Taken together, these 6 developments describe a single map of Asia's AI economy. CoreWeave highlights the competition for physical compute sites. NVIDIA and Safe Superintelligence show that access to advanced compute may increasingly be shaped by strategic financing structures. Moonshot AI points to the continued scale of capital formation in China and Hong Kong's possible role as a capital bridge. South Korea offers a potential hard data signal that AI spending is reaching the export ledger. Vanguard shows that mature node components remain essential to AI infrastructure. Taiwan's cyber debate adds the security layer needed to protect the system behind the chips. The broader conclusion is straightforward. Asia's AI advantage is unlikely to be determined only by who builds the best models. It may be shaped just as much by who can finance compute, secure power, manufacture the full range of chips, and protect the digital systems those industries depend on. For investors, this is best treated as a checklist rather than a verdict. Watch whether CoreWeave discloses Indonesian sites, energy sourcing, and customer commitments. Watch whether NVIDIA-style compute plus equity arrangements spread more broadly across frontier AI labs. Watch whether Moonshot's funding round leads to an actual Hong Kong listing, and how public markets price that path. Wait for official South Korean trade data and company disclosures before treating the export surge as fully confirmed. Monitor Vanguard's Singapore fab as a test of whether AI-related power management demand is truly structural. And watch whether Taiwan's cybersecurity proposal moves from commentary into funded policy. Each of these is a pressure point. Together, they will show whether Asia's AI build-out is becoming durable infrastructure or whether it remains only the next investment narrative.